Okay, guys, now we're gonna be analyzing USDT. And its effects here, guys. So USDT, it's I know Nasdaq, guys. I mean Nasdaq. So Nasdaq, it's more moving. It's more like moving more like a USDT. But then, if you can look at the structure, you can see that this is just a beautiful buy, impulsive correction, and currently the market it's in an impulsive phase. Everyone can see that, simple and straightforward. And then we have these. If this was an impulsive, this was the correction, and then this whole thing, it is what, it is an impulsive. But within this impulsive phase, we still have other structures again. We still have this impulsive phase still giving us impulsive correction like this. So this was the impulsive, and this was the correction, and then this was the another impulsive. So the market is currently within this impulsive phase. So we're not going to concentrate on this impulsive and this correction. We're just going to concentrate on this last impulsive phase of the market. We could also mark this, but it's going to take a bit longer after weeks for this thing to come all the way down to this point right here. So we're not going to concentrate into all of this. We're just going to concentrate on the last part of the graph, which is our last impulsive phase. So let's go to a daily time frame, because we are actually looking for a direction on a higher time frame and trying to figure out which phase of the market are we currently in that particular time. Okay, so if we look at this structure right here, you could see what the market is giving us: impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction. And currently the market, it's within the what, it's within the impulsive phase. So remember, I said what I said: when we are in a higher time frame, the only things that you'll be looking for, you'll be looking to actually figure out, is the market in an impulsive phase or in the correction phase. And then if you figured out that one, you start with the direction of the trend. Is the trend with the in an uptrend or downtrend, or the market is ranging? Once you figure out that one, you also have to figure out the phase of the market. Which phase of the market is the market currently in? If you find that you are in an impulsive phase of an uptrend, therefore the only thing that you'll be going to look for in the lower time frame, you already know that you are just going to be looking for what? For continuation patterns. That is the only thing that you'll be looking for. So if you go to a lower time frame and then you see selling opportunities, it's not good for you to be taking those selling opportunities, because what you saw on a higher time frame, it was clearly stating that we are in an uptrend, and then we are also worse in the impulsive phase, unless the market is in a correction phase of an uptrend of the higher time frame. Therefore, you can be looking for those small selling opportunities. But in that case, like in this case of Nasdaq, we can already see that we are in an impulsive phase. So there is no way that you should be looking forward for any selling opportunities in an impulsive phase. As you can see that the market here had its last break of structure. This low created this high, and the market did what, gave us a correction, which was somewhere here 50 to 60 something percent of golden zone. Therefore now we should be moving up. You see, so we should be expecting the market to be going up. So that is what we're going to be looking for when we go to a lower time frame. But before we go to a lower time frame, I want us to mark the last thing that we will hear on a daily time frame to look for. Since all this was an impulsive correction, impulsive correction, impulsive correction, therefore the market is currently in a what? The market is currently in an impulsive phase. So that is what we're going to be concentrating on. We can also even mark the previous what? We can also mark the previous, maybe previous high. This previous high, maybe we can mark it. We will see the more we go down to a lower time frame to see if is it going to be useful. Is it going to assist us with anything? So we're gonna go to 4 hour time frame. So going to 4 hour time frame, you can see what the market was once gave us these rejections here. So this double top that you saw here, it was a double top to say, for the market to indicate that, as you can see, this has been the structure, the previous structure that we've been marking. Just that I didn't want to concentrate too much to it, But if you have a look at this, these things have been your highs and lows. These have been your highs and lows. So the market has been forming, you see, all the way from here, your highs and lows. Okay, something like this. So the market has been giving you what? Has been giving you impulsive correction, impulsive correction, impulsive, impulsive correction, and then this was our last impulsive phase. So the market gave us this impulsive phase. Yes, within this impulsive phase, we still have this impulsive correction, but this is not part of the main structure. You have to know the difference between the main structure and the substructure. So this was our last impulsive phase. So within this last impulsive phase, the market did what? If you know how to use Fibonacci, you would see that this market gave us this impulsive. So the golden zone was somewhere here. As you can see, that's exactly where the market gave us what? A double bottom between 50 and 60.18%. That's where the market made a what? A 10 to a shooting up. That was a golden zone of which it's good. You see. So now the market was, this was our previous high, this was our previous low, and then the market is within the impulsive phase of the market. This is our new impulsive phase of the market. So we are also looking for what? Impulsive correction, impulsive. That's what we saw on a daily time frame, that the market was in an impulsive phase. So the only thing that we're gonna be doing, gonna be looking for what? Continuation patterns. That it's what we are actually looking for. And then also you can also make this thing a bit easier for you, because this market kind of gave us something like equal lows right here. So if we did see this thing a bit earlier, you would have seen that you could actually also have done something like this. You could also have done something like this to say the market was with what was giving what was within this channel, and then when it broke out, and then yeah, you can actually draw something that looks like this. So this was the most impulsive, and then this was within the correction phase, and then the market broke above this channel. So after breaking above that channel, the market is going to do what? It's going to give you a continuation pattern. And what is it that we saw on a daily time frame? It was that the market was in an impulsive phase. So there is no way we should be doubting this, that the market from this point right here, it is going to be going where? It is going to be going up. So definitely I'm sure that this NAS 100, it is gonna go up. So the only thing that we can wait for, we can just wait for one candle, the strong bullish candle, to be closing above this high right here. If the market can give us one candle to close above this right here. But I think even now you can have maybe that one risk entry, just one position maybe to enter here, but it's not advisable. It's not advisable for you to enter the trade before the market could actually break above this uh, channel of the continuation pattern to be going up. So the best way actually to be doing the right thing, or to teach you the right thing, just to wait for the market to break above this trend line, and then we know we're gonna aim 1:2 or maybe something like this. So this is the only thing that I can say now on Nasdaq. It's simple and straightforward. This is gonna probably play out like this. You see, something like this. So Nasdaq is gonna be nice, simple, and straightforward. This is what I can say to you guys. Aldous FX, I am out.